Engineering Indonesia. My student ID is 62213119309. The company that we are going to present is Sunbeam Product US. For my part, I will provide a comprehensive overview of the fraud accounting, including the introduction of the accounting fraud and the terms and the example of the books. So let's start with the first one, which is the introduction of the accounting fraud. Accounting fraud is an intentional fraud. This accounting fraud is to manipulate the financial statement and to create a false appearance of the financial health. Secondly, we move to the books. So for the books, I will divide it into two parts, which is the terms and the example of the cookbook. Did you know the books actually is the term or slang that we use in the accounting techniques? This is because to make the company's financial statement to look better. Usually, the books mean to manipulating the accounting data to inflate the income and also to deflate the cost in order to drive up the sales and the profits. Next, we will move to the part B, which is the example of the books. So for the books, I have list 3 examples of it. So for the first one is the credit sales and inflated revenues. The second one, it is the channel stuffing. And for the third one is mischaracterize the expenses. So let's start with the first example of the cookbooks, which is the credit sales and the inflated revenues. So companies can use credit purchase to exaggerate their revenues. This is happen when the transactions that purchased by consumers on credit are recorded as sales, even though the companies requires the buyers to delay the payment for another 6 months. The second example of the cookbooks is channel stuffing. So the manufacturers that engage in channel stuffing send and ordered supplies to the dealers at the end of the years. So these purchases are disclosed as revenue, even though the organizations completely expect the dealer to refund the supplies. The last example of the book is the mischaracterized expenses. Most of the business have non-recurring expenses, which is the one-time expenditure that are deemed to be unusual occurrence that are unlikely to happen again. However, the companies may also legally identify this investment in their financial statement too. So from what I have explained, this is related to the next part that we will discuss, which is the explanation of the fraud that happened in Sunbeam Product US. So for the next part, I will pass to Nurhanis Adila binti Muhammad Asri. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nurhanis Adila binti Muhammad Asri. My matrix number is 622-1311-9264. Today I'm going to present to you about the accounting fraud that happened in Sunbeam Corporation. As you can see in my slide here, the first one is caused by the CEO of Sunbeam. This means the accounting fraud that occurred in Sunbeam Corporation was caused by the CEO of Sunbeam itself, which is known as Mr. Dunlap, and his nickname is Chainsaw Out. The next one is complies with other 5 former officers, which means he is doing the fraud together with other 5 former officers of Sunbeam Corporation. The first officer is Russell. He is a principal financial officer of Sunbeam Corporation. The next one is controller officer, which is known as Robert. And the third and the fourth one is the vice presidents, which is known as Donald and Lee B. Great. The last one is the fifth person is Arthur Anderson. He is the external auditor of the Sunbeam Corporation. Chen So had his staff to do some improper job. Chen So also known as an egoistic CEO and irresponsible CEO, which he had his staff to do improper revenue recognition and the statement of reserve for sales return and bad debt. And other than that, he also abused the rules of governing consignment, sales, and other manipulation. The next one is Arthur Anderson was the auditor who responsible for issuing a clean audit report, which is he's the one who covering up the fraud that happened in the Sunbeam Corporation. As Mr. Arthur Anderson was the external auditor of Sunbeam Corporation, so he is the one who responsible for issuing clean audit report or audit opinion, even though he know that the fraud doing by Chen So is clearly violated by GAAP standard. The next one is Arthur Anderson was the auditor who responsible for covering up the fraud at Sunbeam. As Mr. Arthur Anderson was the external auditor of Sunbeam Corporation, so he is the one who responsible for issuing clean audit report or audit opinion, even though he know that the fraud doing by Chen So is clearly violated the GAAP standard. And the next one is because of this fraud, the Sunbeam forced to declare bankruptcy, and Sunbeam Corporation was finally forced to declare bankruptcy because the SEC or Security and Exchange Commission could finally expose the Chen So and his accomplices doing. For the next slide, I will tell you who is the whistleblower. Now I will first tell you the definition of the whistleblower. Whistleblower is someone or usually an employee who exposes information or activity within a private, public, or government organization that is deemed illegal, a waste, unsafe, fraud, or abuse taxpayer fund. And in this case, the SEC is the whistleblower. SEC is stand for Security and Exchange Commission. Why did I say so? As the Chen So doing finally being discovered by the SEC, and SEC complaint filed in the Miami Federal Court. The SEC state that the Sunbeam's revival was a myth or fake, as they know the Sunbeam revenue report was not compliant. And SEC planned to charge Mr. Dunlap and his workers has used various improper methods to inflate the revenue of the company. So it is obviously seen that SEC is the whistleblower. That's all from me. Thank you.
Okay, Assalamualaikum warahmatullahi wabarakatuh. My name Ahmad Ashran Afif bin Ismail. Okay, my question is the pressure, opportunities, rationalization of those perpetrating the fraud related with this case. Fraudulent financial statement in order to mislead a consumer is a deliberate error or lack of sums. Instead of leaks, most cases require the deliberate misstatement of quantity. There are three conditions of fraud from fraudulent statements in misoperation of asset are referred to as the fraud triangle. Okay. Firstly, management or employee have pressure to commit fraud. Second, circumstance provide opportunities for employees. Lastly, an attitude or character of ethical values exist that allows employer to commit a dishonest act. Okay, but for the case of Sunbeam Commodity US, okay, firstly there is a condition in fraud triangle which is the pressures. Study in fraud research also found that pressure increase during period of pressure to reform is a major motivation to commit fraud. The case for pressure, which is an ambitious revenue and benefit objective, was granted to management, but they were treated if they struggle to achieve their targets. Work distribution executive Dion Thayer was said, "There was say, I don't care what's your plan. Administrator have perfect rewards for theft and many dollars at stake. At Sunburn, the pressure was immense." Secondly, the case of for number 2, which is about rationalization. In addition to fast financial statement, Sunbeam Commodity, the US, have commit deception and rationalization. Pressurized rogue workers will explore ways to seize the opportunity for theft to commit. Okay, most administrators were not aware of the scam, but the top executive involved in the fraud rationalized it. Dunlap and Crash conclude that their decisions were accepted on the basis of prior understanding of success and incentive. Sunbeam's major shareholder had hired them to do exactly as they had done to previous companies. Okay, for the lastly is about the case relate to opportunities. The opportunities for deception have been identified by managers. Many of the techniques used by top management have been used by them in the past. Each of Sunburn's own auditor was aware of the scam. She managed to nego with the scam, but in the end, she left in disgust. Payne Weber's portfolio analyst Andrew Shaw found a high inventory and funds on Sunbeam's SEC filings. In at least one instance, the foreign auditors Arthur Anderson found a deception tactic but ignored it as immaterial. That's all.
Hi, I am Nur Izzah Shazamid Hitzir. So today I will explain about the penalty imposed, the effects or the consequences faced by the auditors, the company, the management, the shareholders and any related parties of Sunbeam Corporation. So the consequences faced by the auditor is the right to act or to stand as an accountant before the tribunal is refused. Moving on, the penalty imposed to the Sunbeam Corporation are cease and desist order prohibiting possible violation of Section 17A of Securities Act and Section 10B, 13A, 13B 2A and 13B 2B of the Exchange Act and Rules 10B-5, 12B-20, 30A-1 and 13A-13. Moreover, the administrative actions was released against David Fannin, the former vice presidents, the general counsels and security of Sunbeam because of the misleading image of the company's operating performance in early 1998. Besides that, the former CEO of Sunbeam, which is Mr. Dunlop, was barred from acting as an officer or a public company director. As for the shareholders, they filed a lawsuit claiming that Sunbeam made a false claims about its finance and misled them in order to purchase the falsely inflated stock. So Sunbeam and Mr. Dunlop have breached the Securities and Exchange Act of 1934. Lastly, the consequences faced by the new CEO of Sunbeam Mr. Jerry Dedulavin, is to file for bankruptcy protection in February due to its 3.2 billion debt, and some of which occurred by Mr. Dunlop accusations. So that is all from me. Thank you.
For the conclusion, based on the case and the discussion above, we can conclude that Sunbeam Corporation has committed fraud in accounting, such as the company had staff to do improper revenue recognition, abuse of the rules governing consignment sales, and other manipulation, also understatement of the reserve for sale returns and bad debts. The bankruptcy of Sunbeam can be avoided if the management are more transparent and ethical in their duties. Besides that, the auditor should be more independent in auditing the company financial report to maintain his credibility as an auditor. Thank you.